Hello everyone. Good morning from this part of the world, and depending on what time zone you're tuning in from, I wish you a good afternoon and good evening. I hope you all had a refreshing weekend and are ready, pumped up to dive into another exciting week in the Forex market. I'm in fact thrilled to have you back for our first Forex Morning Mastery session of the week. As always, we will be closely monitoring our key instruments from last week. We shall continue to run through this until we do not find any important, interesting setup to come up with. But at the moment, we'll continue to monitor the USOILSPOT, the USDJPY, and of course the XAUUSD, all of which we did pretty well during the course of last week. And of course, we're looking forward to more opportunities during the course of the week. On the USOILSPOT, we've had some interesting situations there where the resumption of exports in Iraq might potentially increase supply, which has a tendency of inciting selling pressure, a follow-up from what happened last week Friday. Then we also have the geopolitical tension, which can counterbalance the effect of oversupply in the market as the ongoing rushed oil dynamics. Then, as always, we will be looking at the USDJPY, where the Bank of Japan's governor expressed readiness to ramp up government bond buying if long-term interest rates rise sharply. And this has probably been the major driver of the Japanese yen during the course of last week. So will this continue this week? Well, we are going to be delving into that. So if you're a fan of the USDJPY, make sure you stay tuned in. Then, of course, on the XAUUSD, the uncertainty in the market has made the price of gold remain near the all-time high amidst this all uncertainty surrounding the U.S. trade policy and their global economic impact. And of course, inflation concern in the United States suggests that the Federal Reserve may maintain higher interest rate longer, influencing the appeal for safe haven assets such as the gold commodity. So we are going to be looking into that one too today and see how we will be capitalizing on any potential uptrend move or any form of bearish expectations around that market. And before I even go further, I want to apologize for not releasing our usual weekend video on the XAUUSD analysis. It was a busy time for my family and me. I took my kids to a chess tournament during the course of the weekend, and it took most of my time. And by the time I came back, and then on Sunday, it was quite an hectic one. However, rest assured, we will be conducting a comprehensive top-down analysis of the gold commodity this morning. So I encourage you to stay tuned in. And for those who are joining us for the first time, you're highly welcome on board. Very excited to have you around with us this morning. As always, my name is Sheriff Daramola, and I will be your host for the next 30, 40, 50 minutes, depending on how long it takes, as I take you on a journey through the financial market. The Forex Morning Mastery is an educational avenue where we come here together as a family 3 times in a week to delve into the market from both technical and fundamental perspective. So once again, you're highly welcome, and I do encourage you to actively engage in the comment section. So with that being said, here we will be diving right into the business, and as always, the first thing we normally do, of course, is to keep tabs with the fundamental factors that are likely going to be influencing the sentiment in the market for this week. And based on the asset we are looking at, we are going to be focusing on the US and the Japanese economic features. And of course, throughout the first half of the week, we really do not have any high impactful events. So I would love to include mid-tier economic features just for us to have a broader view into what majority of market participants will be looking at. Even though we have this today, Monday, February 24, we are only having one high impactful event, and that is coming in 7 p.m. UTC. That's about 8 p.m. local time, and that is the speech from President Trump. Remember, they are going to be Trump is going to be meeting with the President of France, that is Macron, and he's going to be giving a speech today, and definitely market participants will be looking forward to see or hear what he has to say, as it will have a major impact on the US dollar market dynamic. Then tomorrow, Tuesday, February 25th, we have a couple of mid-tier economic features like the housing price index, which gives an insight into the performance of the housing sector in the United States. And of course, we all know how the housing market is considered as a sensitive factor to the US economy. And generally speaking, a high reading is seen to be a positive development for the US dollar. So we look forward to see this one 2 p.m. UTC tomorrow, Tuesday. And then we have a couple of speeches from the Fed officials later tomorrow evening. So I encourage us all to mark out this timing on our calendar, as we do not want to miss out on the trading opportunity that comes with this event. So with that being said, we will be diving right into the chart, and as always, the first asset we are going to be looking at this morning is the USOILSPOT, and already I have a buy position active at this moment. But before we go into the technical details and the reason behind me buying around this current area, let's talk about the fundamental drivers that has been influencing this market. Remember, last week we were selling the USOILSPOT. It moved strongly from the $72.85 level right into the $70 mark to emphasize the strength of the sellers in this market. And this is due to a couple of development last week. Remember, we saw the US crude oil inventory rise significantly last week, showing us that there is high oversupply in the market, making the oil commodity very much available and reducing the demand for that oil. Then we also have the resumption of Kurdistan exports. This is planned to push into the market 185,000 barrels per day via the Iraq-Turkey pipeline, and this could probably increase global supply to further support the downtrend scenario. However, as we head into this week, there are some things we need to also take into account before making any informed trading decisions. Of course, we want to be monitoring the geopolitical event. We want to stay informed about development in the Russian-Ukraine conflict and Middle East tension, as this can lead to supply disruption and, of course, price volatility. Then we also want to be looking at any form of trade policy announcements, especially from the US. As we all know, the US trades, especially regarding tariffs, can influence global economic growth and, of course, demand for this oil commodity as well. Then we are also going to be keeping an eye on reports about oil inventories for this week. We have the EIA and the API report, which comes much more later in the week. That is Wednesdays and Thursday. And of course, this will give us an insight into production level as well. And of course, potential development from Iran too as well. So we want to stay updated with all of this while we keep tabs with this current market. But I still strongly believe that at this particular junction, considering what has been going on since last week Friday, the market might have the privilege of a rebound, considering the fact that the $70 area had been a strong support line for a very long time. And to further support this is the Russian-Ukraine conflict development and of course the US trade policy uncertainty around this particular area. So I believe that we could likely see price increase from this area. Now let's look at things from the higher time frame. Now if we go into the 4 hours time frame, this is what I was looking at here after taking into account the character of price action since the beginning of this year. Of course, it is quite clear the market has been strongly bearish since the beginning of the year. And of course, you can see we have a descending trend line here to emphasize the strength of the sellers, as you will see after the breakdown of the trend line at the beginning, during the second half of the month of January, price had continued to maintain strong selling pressure. Now, one interesting thing about this whole structure is the fact that despite the strong bearish momentum in this market, you will see that the $70 area had become a strong support line. As you will see, since the beginning of this month, every attempt by sellers to break through has always been met with strong resistance from the buyers, and this continued into last week's trading session. And of course, despite the resistance around the $73 area, you can see how price came back to close just right at the $70 mark at the end of last week trading session. And for me, the inability of sellers to break through this area could be a platform that could drive price higher. And of course, considering the Russian-Ukraine conflict and the US trade policy uncertainty, which could affect global economic growth and oil demand, I strongly believe that price may likely resume an uptrend scenario. And in fact, since the beginning of this month, we've always seen a move of about 300 pips caught within a range bound structure, and we are going to be monitoring how price will react to the structure. So my key level for this week is the $70 mark, and as long as price remains above the structure, I want to maintain a bullish bias. Now, how far will it go? Well, in the meantime, we will have our TP target anywhere around this resistance line at the $73 area. As you will see, buyers have found it difficult to break through the structure since the beginning of this month. However, if buyers fail to gain momentum above the $70 area and price drops below the $70 mark, this will be the first time price will be breaking the structure since the month of December, and of course this will trigger a downtrend move for us. Now let's scale down into our execution time frame, that is the 1 hour time frame, for us to see how the market has been reacting to this particular structure since the beginning of this week. Now, scaling down into the 1 hour time frame, we will begin to see things more clearly. As you will see, the first 12 hours of the week have seen price action confined within a range bound structure, as you will see here, between the $70.42 level and of course that key level around the $70-ish. Now, with a range bound structure in play, we have this further emphasized the prevailing uncertainty at this point. And you know how we treat our range bound structure in this community. We exercise patience, waiting for price action to either break out of the resistance line to give us an opportunity to buy, or break down the support line of that range bound structure to give us an opportunity to sell. Now, if you look at the trading panel at the bottom of your screen, you will see that I already have a buy position triggered around the $70.28 level, somewhere around there. I bought it this morning after noticing that sellers are still struggling to break through the key level at the $70 area, and for me it looks like a promising opportunity to join an uptrend move after considering that important fundamental factor around the Russian-Ukraine conflict and the US trade policy uncertainty. So I will see this as a counter trend opportunity, a short-term buy potential, and I want to see how far this momentum is going to go, maybe back into the trend line, giving us about 140 pips. And if it extends into the $73 area, we are looking at a maximum of 300 pips. Now, for those of us who are yet to join this trade, I would suggest that placing a buy stop order above the resistance line here, that is a breakout of the resistance line, could be a very good opportunity to join an uptrend move. So in fact, I would like to place my buy stop order there just for me to capitalize on that uptrend move if ever price breaks out of that structure. So let me just do that right away, and I encourage you to do so if you want to be part of this move this week. So I just placed a buy stop order above the $70.42 level, and let's see how far it's going to go. And if it so happens that sellers take advantage of this market due to the potential oversupply in the market, I want to be seeing a breakdown retest. I need some confirmations before I jump into a sell here. So I would like to see a breakdown retest of the $70 area before I can actually join a sell at this point. So this is basically what we are looking at for the first half of this week. A beautiful and simple range bound structure where we are waiting for market participants to complete that negotiation, and of course the breakout or breakdown will be all we need as a signal to join that direction. So I encourage us all to mark out the structures on our chart, as we're definitely going to be needing them to guide our independent trading decisions. So there you have it, my simple view on the US All Spot commodity. If you have any questions whatsoever, feel free to let me know in the comment section. So as always, I will be taking the next 10-15 seconds off. Let's see if there are any questions. If you need some clarifications, feel free to drop them in the comment section, and do not forget to give the video a thumbs up. And thank you very much, guys, as you do so. So see you soon. So I see your comment here, Adeni Babalola. Good morning to you. Happy to have you around today. How are you doing? And trust you had a great weekend. You're saying here that is gold like to sell at? I'm not sure I understand what you mean by that. Is gold like to sell at? I'm not sure I understand that. Though I have 2 buy positions on gold, you can see the trading panel right at the bottom of your screen. I already have 2 buy positions already, which are immensely in profits. We will talk about that when we get to the gold commodity. So I encourage you to stay tuned in. Don't miss out on that one. All right. Okay, Wokocha Kingdom, good morning to you too. Glad to have you around. How was your weekend? Trust you're doing very well. All right. So in the absence of no questions, I want to assume that we are all on the same page, right? Please mark out the structures accordingly. This is what I will be using to navigate this market, at least for the first half of this week. So let's see how this is going to play out. And trust me, I will be giving you updates as at when due on my Telegram platform. So I wish us all the best of luck on the US All Spot trade. So with that being said, here we will be moving right into the next asset on our watch list. Stay tuned in, guys. So the next asset we are looking at this morning is the USDJPY, and last week was quite an interesting one for us as we saw the USDJPY nosedive. And throughout the course of last week, we were looking for more of selling ideas thanks to a robust Japanese economy. Remember, we saw the GDP for the Japanese economy rise by 0.7% expansion compared to the previous quarter, which was at 0.3%, which was quite enormous, as the data came in way higher than what market participants were expecting. And this further escalated the price of the Japanese yen, as we saw a lot of dumping of the US dollar for the Japanese yen. And this has also resulted into some weakness in the dollars as well, despite the Federal Reserve hawkish stance, and the renewed selling of the US dollar may likely limit the USD pair's recovery attempt. I'm talking about long-term perspective here. And of course, if we consider the signs of broadening inflation in Japan and anticipated wage gains, it suggests that the Bank of Japan may raise interest rate more aggressively, which could potentially strengthen the Japanese yen. So for this week, we are going to be looking at a handful of factors here. We want to be staying updated on statements and policy decisions from both the Bank of Japan and the Federal Reserves, as their monetary stance directly will impact the USDJPY. So these are things that we are going to be taking into account. For instance, Donald Trump is going to be speaking 7 p.m. UTC today. We want to listen to what he has to say. Then we're also going to be keeping high on inflation rates reports, consumer sentiment index, and other economic data from both countries to anticipate potential currency movement. And we talked about this earlier. We looked at the economic calendar. In fact, the second half of this week is jam-packed with high impactful events from these economies. Now, look at this. We have the Tokyo Consumer Price Index on Thursday, 11:30 p.m. UTC. And then we have another inflationary data from the United States, the core PCE, coming in on Friday. And besides this, we have the retail trade data from the Japanese economy. All of these are coming in on Thursday. The GDP for the US too is coming in on Thursday too as well. So you can see that the second half of this week is likely going to be bringing in some high volume of trading in the USDJPY market. So we really need to look at the structure strategically and ensure that we be on standby to capitalize on this big move that may start anytime from Wednesday, Thursday into Friday's trading session. So now let's go right into the chart and let's see if this bearish momentum that started last week will continue into this week, or it is high time for the US dollar to gain some recovery, maybe in the form of a short-term retracement move of that impulsive bearish leg we saw last week. So my first point of contact for this week is right here on the 4 hours time frame, I guess. No, I think I started my analysis on the daily time frame because I needed to see what things are looking like from an holistic standpoint. And looking at the daily time frame, I think I went to as far back as 2022, I guess. And one thing that was very clear here is the fact that the market has been on a strong bullish momentum since the year 2022. Of course, as you will see, we have an ascending trend line in place to capture the pivot lows. As you will see, price consistently found higher highs and higher lows. Then in addition to this trend line is this key level here at the 149.00 area, a level where price action closed at the end of last week's trading session. So you can see this level here had played a significant role in determining the direction of price action since 2023 October, as you will see here. It was at points a resistant line, then it became a support line at some point, and since October of last year, it had continued to serve as a support line. Look at it here, support line, and just at the end of last week's trading session, we saw price action close exactly at that spot. Now, the question as we head into the new week is whether this key level here will continue to serve as a support line. For me, if you look at this technical structure here, it is reasonable for us to predict that price may likely rise from this area, considering what has been going on around this area in the last 3, 4, 5 months, as it has a strong memory for buying power. Look at this here. Buyers came in to buy the market from the 149.00. The same thing also happened in December, and right now price is back into the structure. So I have a strong feeling that price may likely resume some momentum from this particular area as market participants take some profit from the Japanese yen they bought last week. So for those who had bought the Japanese yen last week, may want to be taking some profits just to make some money out of that move before considering whether to continue selling the US dollar, and this could give us a little bit of profit, maybe about 100-200 pips if price moves significantly from this particular area. And if it drops down the 149.00 area, I want to see breakdown retest of structure happen, and I'm looking at a TP target along that ascending trend line, dovetailing to about 500 pips to catch there if price action ever moves in that direction. Now let's go down into the 4 hours time frame. There is a structural detail here that I would love to share with you, which makes this whole trading setup much more interesting. In fact, the USDJPY is one of my favorite trading setup for this particular week. Now on the 4 hours time frame, what I did here was to take into account the character of price action since the beginning of this year, and of course you can see the US dollar had consistently dropped, found lower lows and lower highs, and within this downward momentum I was able to spot a descending trend line where I captured every point where market participant deemed it cheap to buy the USDJPY. So let's start from, I think, December last year. You can see, though it wasn't that strong, we saw a buy as soon as price tested the trend line, and then we saw this happen again in December. As you will see, immediately price tested the trend line, we saw another momentum, and then fast forward to February, that is the beginning of this month, we saw another buy from that trend line, and look at where we are right now. Price is back into the structure. We saw a buy here on Friday, Thursday stroke Friday, and right now price is right there. So will this be another platform that could send price climbing to the upside? This is what we are trying to decipher during the course of this session. Now, zooming into what has been going on here, you will see buy pressure. Look at our key level, how beautifully it lines up with that descending trend line, making it a crucial juncture to look out for trading ideas. In fact, I'm leaning towards to buying from this particular area since price still remains above the trend line, showing signs that price wants to respect it one more time, just like it has been doing since December last year. And price remaining above my key level makes it promising for me to buy. And if you look at the trading panel at the bottom of your screen, you can see I already triggered a buy position, though it's still struggling to gain momentum at this juncture. Hopefully price will maintain this traction going forward. And like I said, the only condition that will make me sell the USDJPY is for price to drop below both the trend line and the 149.00 area, which is yet to happen at this point in time. Now let's scale down into the execution time frame to see how the market has been reacting to this important confluence since the beginning of this week. Now scaling down into the 1 hour time frame, we'll begin to see things much more clearly. In fact, I already have a range bound structure marked out. As you will see, the last 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 hours have seen price action confined within the 149.400 and the 148.850. And one interesting thing about this whole consolidation phase is that it is happening within the trend line and that key level, which further emphasizes the crucial nature of the structure we have here. And of course, you know how we treat our range bound structure. We do want to exercise patience and wait for price to either break out of the resistance line to give us an opportunity to buy, or break down the support line of that range bound structure to give us an opportunity to sell. And in fact, if it breaks down, price will be below the descending trend line, welcoming selling ideas. But in the meantime, price has broken out the resistance line here, which has triggered my first buy position on the USDJPY, and I'm hopeful that this will continue to the upside. However, you can see the last 4 to 5 hours I've seen a little bit of choppy market conditions here, where it seems there is an indecision going on here as market participants have remain caution to place any aggressive bet. And of course, we understand why this is happening. Remember, we have major event coming up later in the week: the core PCE, the durable goods order, the GDP data, initial jobless claim count, and of course we have the core PCE. And then from the Japanese economic docket, we are looking at the CPI, retail sales data, all of which are coming in during the second half of the week. So I can understand why market participants are looking cautious at this point, as they do not want to expose themselves into the market yet, waiting for these decisions to happen before making any informed decision. And one thing that we would likely see here is an extended sideways trading activity, maybe not until Wednesday, when they will begin to get an hint or insight into what is likely going to be coming out from these datas in the second half of the week. So for me, I will maintain a bullish bias on this one, since price remains above the trend line we identified on the 4 hours time frame, and of course above the key level we identified on the higher time frame. So I maintain a bullish bias at this point, as long as price remains above this key level we have here. Please, I would encourage us to mark out this level. Remember, it has a strong memory for buying power, and hopefully this could incite some uptrend scenario for us here. So I wish us all the best of luck on this one. So I will only be buying above the 149 and consider selling only if price action breaks down, retest the 148.850. So let's see what happens, and if anything new comes up, I will definitely update us on my Telegram platform. So that is my simple idea as regards to trading the USDJPY for this week. I hope I made myself clear. However, if you need any clarifications, or you want to confirm anything, feel free to let me know in the comment section. I'm here and willing to be of help in that regard. So see you in about 5-10 seconds before moving on to the final asset on our watch list. Good morning to you, David. I see your comment. How are you doing today? Happy to have you. All right. So in the absence of no questions, I guess we are all on the same page at this juncture. We've marked out the structures accordingly. Let's see how things plays out in the next couple of hours. And I want to wish us all the best of luck on the USDJPY. So moving on to the final asset on our watch list for this week. So the final asset we are looking at is the XAUUSD. And of course, last week was one of the most successful week for us on the gold portfolio, as we were part of that immense move as price action hit another record high at the $2,956 area, thanks to the global economic uncertainty, the weakness in the US dollar, geopolitical tensions, and concerns of inflation in the United States. Now, going into this week, what are other chances that price will continue to rise? Are we going to see price break out of this new record high again? It appears so, as you will see notice since Wednesday last week, the area around the 2,925 had continued to be a buying niche as market participants keep holding on to the gold commodity. Now, to navigate this market this week, we want to be keeping a close eye on upcoming US economic data releases. Like I said earlier, the PCE, the GDP figures. This will be providing insight into inflation trends and economic health. Definitely, it's going to be influencing the gold prices. Any form of positivity around the PCE and the GDP could incite strong traction in the favor of the US dollar, and of course could lead to profit-taking activities around this particular area, especially considering the overbought situation we have on the crude, on the gold commodity. Then we are also going to be staying informed about the geopolitical developments, as it can swiftly impact market sentiment, and it's very important that we stay updated, allowing ourselves to anticipate any potential shift in the demand for this gold commodity. Then we're also going to be listening to statements from Fed officials. I think I showed you that there will be a couple of them tomorrow. We have Barr and we have Logan on Tuesday. I think we also have some other we have on Thursday we have Bowman, we have Amak, we have Aka, all of which are going to be speaking, and definitely everyone will want to listen to what they have to say, as it will be giving market participants an insight into future monetary policy decisions, and of course their perspective to the current US economic outlook. And given the mixed drivers affecting gold, we are going to be considering employing a balanced approach that includes both long and short position, adjusting our sentiments as the market develops. So at this particular point in time, the market is looking a little bit choppy, especially after testing that record high, which is expected, as major players who were part of that uptrend move may likely want to be taking some profit out of fear that price may crash from this particular area. And if we look at the market drivers, everything shows that the path of least resistance for the price of gold still remains to the upside, like the concerns over the potential economic fallout from trade tariffs imposed by President Trump, which have also increased demand for gold as a safe haven asset. And then recent data indicating a weaker US growth outlook has also led to the decline in the US dollar, making gold more attractive to investors. And not only attractive, it makes it much more cheaper, as the gold is traded in the dollar, and if the value of the US dollar is reduced, it makes it cheaper for other currencies to purchase. Then the ongoing geopolitical issues have also boosted appeal for gold commodity, and in fact, I strongly believe that the path of least resistance for gold is to the upside. Now we want to see what path is it going to take. Is it going to retrace a little bit further to the downside before it continues, or is going to be on the up move at the get-go? Now let's look at the 4 hours time frame quickly. Let's see what I was able to come up with right here. And of course, if you look at the 4 hours time frame, it's quite very obvious that the gold has maintained its uptrend scenario for a very long time. And what I actually did here was to take into account the character of price action since the beginning of this month. And look at what I have here, a beautiful ascending trend line to help us navigate this market this week. So if you connect the series of higher lows here, you can see we have a beautiful ascending trend line. And remember, you know how we use our ascending trend line in this community. As long as price remains above them, we want to be looking out for patterns and structures that support buying ideas. And my key level for this week is right at the 2,925, a level which initially was a selling niche at the beginning of last week. We can see what happened here. Buyers were struggling to break out of the structure. They made an attempt here during the upper week, which failed. And then we saw last week price broke out. And since then, the 2,925 had continued to be a formidable platform to push price higher. So for me, I still want to hold on to that bullish bias. And in fact, as at this morning, when the market opened, you will see right at the bottom of your screen, I already have two buy positions running, one with about 445 pips in profit and the other one with about 76 pips in profit, with a total of about 130 pips. And for those of you who are taking advantage of that opportunity right there, well done and kudos to you. But if you are yet to take advantage of it, let's see how we can join this move this morning. So what we are going to be doing now is to scale down into the execution time frame, where we do want to see what structural detail is revealed from the trading activities that started this week. Now, scaling down into the 1 hour time frame, this was what I was able to come up with. A beautiful range bound structure. As you will see, the last 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 hours, you can see price had remained confined within the 2,940 and the 2,921-ish, emphasizing the level of indecision in this market. And for the fact that the last 2 hours have seen price break out of this resistance line, has further reinforced the expectation that price may likely continue to the upside. Now we have two parameters that support three, of course, that supports the uptrend scenario. The first one is the fact that price still remains above the ascending trend line, so we will continue to look out for structures and patterns that support buying ideas. Then we also have price maintaining its traction above this crucial support line at the 2,925, which has led to the breakout of this resistant line at the $2,940.50 level. Now, for those of you who had missed out on this buy, let's see if the market will come back into structure. I still strongly believe that the 2,940 and the 2,935 area is still looking formidable to continue an uptrend move. And of course, if price goes ahead to break out of the this record high here at the 2,955, we want to be adding more buy positions to our existing trade. So in fact, I'm going to be placing another buy stop order right now above this record high. So I'll place it right away, and of course place an alert there to let me know when price action gets into the structure, so that I can move my stop losses and secure my previous buy. So for this one here, for my existing buy positions, I think it's high time I moved my stop losses. Let me secure some of this profit. So the first buy was from this particular area, so I think it's still very, very close. So let me just put it at 2,938. I do want to be giving enough breathing space for price action to okay, the first one is 2,937, 2,941. I think it's still very close to my entry point, so I will still leave it there and let's allow price action to move around. So that is basically what I'm looking at. I'm maintaining a bullish bias in this market. Now, if it so happens that price drops significantly back down, I would not panic. There is no cause for anxiety, as this could probably be a retracement back into the structures we talked about earlier. That is the key level at the 2,925 and the ascending trend line, which still has a potential of pushing price higher. So if price drops, we can still look out for buying ideas around or above the 2,925 level. Now, the only condition that will make me start considering selling is for price to break down both the ascending trend line and the $2,921.25 level. That is the only condition that will make me sell. In fact, I will need price action to take out all the buy positions within the 2,925 and the 2,921. After the breakdown, price comes back to gain some liquidity to push further to the downside. That is the only condition that will make me sell the XAUUSD for this week. So there you have it, a simple and well detailed analysis on how we are going to be navigating this market today or for the first half of the week. We have a simple structure where the 2,925 remains a formidable support platform to push price to the upside. So we maintain a bullish bias on this particular one. So that is my simple view on the XAUUSD. I hope I made myself very, very clear. If you have any questions whatsoever, feel free to let me know in the comment section. And for the go-go challengers, we are going to be scalping the gold market today, so I look forward to seeing you guys right on the Go Gold Premium platform. Let's start the week on a very positive note. I will be with you in an hour 30 minutes from now. And then there is another membership perk which we just included on the YouTube platform. It's an elite signal platform where you have access to see a couple of premium signals I usually share out on a weekly basis, and of course monitor the trade through the course of the week. And of course by the end of the week we do performance review on that platform. You can check it out on the membership column. And for those of you who are part of the Go-Go Challenge, it's going to be free for you guys. So looking forward to you to join, and let's make this a profitable week for us all. So it's on this note, I think we have come to the end of today's Forex Morning Mastery, but let's see if there are any questions. I will take about 5-10 seconds off. Let's see if there are any questions, and please do not forget to give the video a thumbs up. Let's make the number of likes tally with the number of people on board. Thank you very much as you do so. So in the absence of no questions, I guess we have come to the end of today's Forex Morning Mastery. It has been a great moment with you guys. I'm so excited to be part of your trading journey for this week. We were able to run the USOILSPOT, the USDJPY, and of course my favorite, the XAUUSD, where we were able to identify simple trading setups that will help us navigate this market this week. I hope you mark those levels out accordingly. If you have done so, well done and kudos to you. So all we need to do right now is exercise patience and allow the structures to mature. And for those who join us for the first time, I hope you've clicked the subscribe button so you don't miss out on our subsequent editions. And I do hope you are able to gain one or two things from this current session. If you did, you want to be part of our subsequent editions, as the more time you spend with us, the better you get to understand our analytical approach. So I look forward to seeing you same time on Wednesday, 9:30 a.m. West African time, 8:30 a.m. UTC, as we come here again to review how well these assets have been doing, and of course prepare ourselves for the second half of the week. So I want to wish us all the best of luck today. Trade smart, trade consciously, and do have a wonderful evening, everyone. Bye.